Stochastic Oscillator, a great indicator to know when to buy or sell a stock. Hello, today we'll talk about a very useful technical indicator to use in the stock market or Forex. If you have a brokerage account and have already in mind a stock to buy or sell, the Stochastic Oscillator can help you decide when is the best time to do it. This short video has a practical application. The purpose is not to discuss the theory behind this technical indicator, but to show you how to use it to your advantage when trading. Before we continue, please don't forget to hit like and subscribe. The stochastic oscillator is a very reputable indicator, although less used than the RSI, which was covered in another video. So why should you know how to use the stochastic oscillator if there's a RSI? Well, generally speaking, the RSI is more useful in trending markets, but the stochastic oscillator can be more useful in sideways or choppy markets. With that said, let's move forward. You might see that your trading platform offers the option of slow and fast stochastic. I prefer the slow stochastic option, as it's less choppy and confusing, especially since I'm not a day trader. So here's how the stochastic oscillator works. The stochastic oscillator is made by two lines. It ranges between 0 to 100. Overbought conditions occur when the lines, which usually move in the same direction, go above 80. Oversold conditions occurred when the lines go below 20. So according to the stochastic oscillator, when should we buy a stock? Once the lines from the stochastic oscillator are in the oversold territory, that is below 20, wait until the lines cross just above 20 to buy the stock, as the price should go up. And with that said, according to the stochastic oscillator, when should we sell a stock? When the lines are above 80, the stock price is in overbought territory. Once the stochastic oscillator lines move just below 80, it means you should sell the stock, as the price should go down. It could be possible that the lines remain above overbought territory, especially in a strong uptrend, and that would not necessarily mean a sell signal. You should see the lines crossing below 80 to be a sell signal. Similarly, whenever there is a sustained downtrend, stochastics can remain below 20 in oversold territory for extended periods, without necessarily meaning the stock should go up, just like in this example from the recession in 2008. You should actually see the lines crossing above 20 to have a buy signal. As you can see, the stochastic oscillator consists of two lines, K and D lines. So another way of reading stochastics is when the K line crosses over the D line and goes above it. That's a buy signal, as the price should go up, just like we see it in this example. Conversely, when the K line crosses below the D line, it's a sell signal, as the price of the stock could go down, just like in this example. The stochastic oscillator can also be useful in predicting if a price trend could be reversed. Here's an example. Notice I changed the chart type and decluttered it by removing the stock volume indicator. So, say the price of a stock reaches a lower low, but the stochastic oscillator shows a higher low than its previous one. Well, that's a positive sign, as it might indicate that the stock price could go up, as it did in this example. You can see that when placing the two lines, the one from the stock price shows a negative slope, whereas the stochastic oscillators has a positive slope. Granted, it looks almost flat, but look carefully and you'll see. That's a bullish divergence, and that's a positive sign. Conversely, when the price of the stock starts reaching new highs, while the stochastic oscillator reaches lower highs, that's a bad sign, as it usually means the trend is going to reverse. See how the line placed on top of the stock price forms a positive slope, while the line placed on top of the stochastic oscillator forms a negative slope? Well, that's not good, as it suggests the price could go down, as it actually did. That's a bearish divergence. If you watch the video about the RSI indicator, which I recommend you do, you'll see that the bullish and bearish divergence work the same way in the RSI as it does in the stochastic oscillator. Let me know what other indicators you'd like to know more about. Please remember to subscribe to my channel for more content. Also, don't forget to share with your good friends. Thank you. Have a great day.